Hey, folks, thanks for joining in, listening in. I am joined today by CEO of REC Canada, Simeon Papailias. We got a couple of really big topics to cover. Number one, Simeon's going to give us an update of what's going on in Toronto, the GTA, the horseshoe, what's happening in that world. But as importantly, another big deal that we have to know about, which is Bill C-23. Simeon, thanks for joining us. Appreciate you always coming on and giving us an update.
My absolute pleasure, Patrick. Nice to see you again, my friend. And yeah, we have a lot to unpack today.
So let's talk about it. When we look at the opportunities and look what's happening in the GTA, is there opportunities? Is there not opportunities? What are you seeing in the market, given the fact that we got the recent interest rate hike? I like to, I'm kind of configuring it as a bit of a sucker punch. Tiff Macklem came out, Bank of Canada, throws a quarter point on it, takes the air out of, I guess, the tires, if you will, because we started to see some momentum again in the real estate market. He said, no, that's not good. Boom, we get another rate increase. He makes it about inflation. We can get into the politics and the Bank of Canada. Don't raise rates to kill inflation. It's not going to work. But anyways, that's a different conversation.
So I think
let's go down.
Just to touch on that, I mean, the market hasn't been slowed down. The market's moving. It's the hottest time of the year for real estate. Have they punched the air out of the lungs? The answer is yes. We had a great little momentum there, seeing February and April's interest rates holding still. And then, of course, they use the increase in activity, that momentum to cater to the agenda of the inflation not coming down fast enough. You can't suck and blow consistently. And that's the problem here. We keep bringing people in that are looking for housing. We're talking about housing here. We're not going to solve the world's problems, but you keep bringing people in. Jobs are available and huge shortages in human resources. So you have this super weird economic dynamic in the GTA and the entire horseshoe, for that matter, where you have 10, 12 million people in 150 square miles of land, 12 million people looking for work, looking for housing. And the interest rate hikes are driving up rents, which drives up inflation. So we're consistently battling the craziest of dynamics. We're trying to fix something that we can't fix it the way they're doing it. So as far as real estate investors are concerned, as far as entrepreneurs looking to deploy capital to make a return is concerned, I can tell you without a doubt, this volatile, this toxic environment that the government creates is going to be something that we can leverage as investors for a decade or more to come, with massive gains to be made. So opportunity lies right in front of us. And the two things that you asked me to come on to kind of get the beat on the street, like what's happening, and of course to speak about the biggest opportunity in real estate history, which is Bill 23. Because that's all unraveling as we speak. So the legislation passed, and we're going to unpack it, but it hasn't been implemented yet. It's coming. There are people like us. There are many people like us, like chomping at the bit. I know as a fact, funds are being created. I know joint partnerships are being created in anticipation to deploy capital to convert homes from A to 4As. You know what I mean? So we're going to be able to go to 4plex and 5plex.
It's an interesting, I just want to cut in here a little bit so we don't step over it. I think we really look at this market, what's going on right now. You make a really interesting point. When we talk about the number of people coming into the country, the job shortage of labor is often caused by the fact that at whatever level, we're not bringing in the right talent, if you will. We know there's going to be labor shortages in terms of trades because they're not bringing that skilled trade labor in. So we run into these problems. And as the rents continue to increase, we know that the demand for rentals is going to continue to increase dramatically. And here's the thought on this. And I think it's important for investors to understand is that when you're building this business of investing in real estate, what do you want to know? You want to know that you've got clients. I mean, it's really important to know that you've got this never-ending supply of people who are in demand for your product. But what I'm also seeing here, Simeon, and maybe you can speak to it, is that it used to be I'm going to say a lower to kind of lower middle income that were struggling and couldn't come up with a down payment. It's now become a middle and even higher middle net income problem. I mean, you're seeing household incomes with $150,000, $200,000 of a household income that still can't afford the mortgage payment, and or they can't come up with the down payment, and so they're still renting. So that the expansion of the cohort, if you will, that is renting, I think has changed dramatically. So not only have you got more demand from immigration and the people moving into the provinces right across the country, but you've got a higher demand in terms of just the people that need to rent because they can't afford to buy. And that includes a middle income family, maybe even an upper middle income, given what's happening. But how do you see it from your perspective? Would you align with that thought process, Simeon?
100% I align with that process because I live it every day. I had a perfect example of a family with 266,000 household income, which is well above average. It's actually
Yep.
Only 40,000 from top 1 percentile of income.
Yep.
They could not upsize. I'm not talking about mansions here. So for anybody thinking that we're talking high-end real estate, I'm talking about they were trying to acquire a 3,200 square foot home in Mississauga.
Mm-hmm.
The average 3,200 square foot home in Mississauga is now almost $2 million.
Wow.
Nothing to do with high living, high roller, pound my chest home.
Yeah.
Just a home. It sold in 1985 by Mattamy Homes for $300,000, guys. It's a average suburban home. But to get that home, you need to make $300K as a household.
Yeah.
Or else you're not getting it. So
this does really open up the door for investors. So when you look at what's happening in that area, I mean, you've got a top performing brokerage, one of the best in the country, and you've got a team of people that are boots on the ground every day. So when we look at from an investment point of view, we see developers and or builders that are launching projects. They're being really sharp with their pencils. They're being very, I guess they're adding a lot of bells and whistles for somebody like yourself who brings a great client base. But what are you seeing overall for opportunities for investors, given we know that there's demand is growing, especially on the rental market? But how do you see it from your perspective in terms of opportunities?
So again, I am a data-driven professional. I don't take anecdotal evidence to the finish line without data to back it. So I use a two-prong approach. I will not trust data unless I have anecdotal evidence, meaning see it on the street. And I will not use anecdotal evidence without data to make sure that I'm not seeing a one-off. So everything we look at has to have the confirmation of the other. And what I actually will do, I was going to say everybody can Google it, but better yet, I'm going to provide you with what Royal LePage did a national study on investors. And that study has brought to light some stats and some facts that have awakened the giant in the country. My CEO, we have REC Canada. We're the number one team for most transactions across all of Royal LePage in the country. 20 coast to coast, we do the most real estate for the organization. With that being said, my CEO of Phil Soper, who is one of the not one of, he is the most sought after real estate data guy in the country.
Yeah.
Maybe in North
He's a
America.
legend. Yeah.
Legend. So whoever doesn't know Phil, by all means, Google him, take a look at some of his stuff. He's on Bloomberg almost every day. But at the end of the day, he spearheaded that report. That report is crucial and a necessary piece of information that you need to be able to recite. You need to know it inside out. That investors report outlines that 50% of downtown Toronto and Vancouver, for that matter, are owned by people like me and you, not real estate investment trusts, not the big bad they, whoever they may be. It's us.
Right.
We are Canada's rental stock. So when we say we've negotiated 20 or 30 units at this tower, this tower, at this tower, it's going to be right beside the brand new LRT coming up in that corner. This is where people will have to live, not want to live. They will not be able to afford a car and a condo if they want to live in Toronto. Forget it.
Mm-hmm.
So the average citizen, the average brother or sister that wants to make a life for themselves and live anywhere near civilization and work and parks and restaurants, all the things that we all share and love, they have to live wherever we put them.
Mm-hmm.
And it has to be near transit, it has to be near employment nodes, healthcare nodes, retirement nodes. All the things that we have talked about to death our entire careers ring more than true today. So, so that's one of it. The other portion of it, which we're going to unpack, and I've prepared a one pager for your
Yeah.
audience, Patrick, and a reference point, is Bill 23. But I want
Yeah.
to finish our conversation on kind of the market update. From the market update, yes, they gave another slap to the face to the end user Canadian, to the investor. They reinforced our opportunity. The more they do this, the higher rents go, the wealthier and more stable our portfolios become. So
Mm-hmm.
every time, like, I know it's tough to look at your variable mortgage statement on your rental properties right now, but
Mm-hmm.
everybody should just know that every time they do this, all they've ever done is make you richer and more stable than ever. And I know it's counterintuitive, but the more people that can't afford homes, the stronger your portfolio of rentals are.
Well, there's so many things to unpack in that, and I'll share that Bill 23. We'll go through it shortly. I think there's a couple things here that we don't want to step over, and this is really where we're seeing the problems start to emerge. And that is, to your point, 50% of the rental stock that's right across the country is provided by moms and pops and yous and me's and just everyday investors who are trying to build a real estate portfolio. And yet, what we are challenged with is these increasing interest rates. And I did a segment recently, which is pick your poison. Do you want to buy today, knowing that interest rates will go down? I believe that at my core. Do I know when? No, but as the bank overcorrects, which they always do, as the government does all the things that they do, they overcorrect, they over-exaggerate, we'll hit into some form of a recession, a downturn into the economy, whether it be full-blown, soft, hard, whatever you want to do. But the point is this, is if you're buying today, you're paying a little bit extra rate, no doubt about it. It pisses us all off. But ultimately, those rates start to come down. You can either make that choice, figure out how to work around that, manage your cash flow differently, whatever that might be, and or you sit on the sidelines, do nothing, and then chase it when interest rates come down, because the minute interest rates even threaten to come down, you know what's going to happen to the market, Simeon. So, here's the deal, folks. When you're talking about investing in real estate, it's not easy. Nobody's suggesting it is. As a matter of fact, right now, I would say real estate investing is not for the faint of heart, but neither is making millions of dollars and creating a financial future that will pale, or everybody else will pale in comparison to those who are investing in real estate, given what's happening on a global economic scale. And I really do believe that. So when you surround yourself with the right team, with the right people, when you get involved with somebody like a Simeon and his team in terms of REC Canada, these are opportunities that we have to look at. So I know it's a bit long-winded, but I think we have to really pick our poison and get the hell off the sidelines, surround ourselves with the right people. I just wanted to say that because the opportunities continue to emerge.
I don't think you're long-winded at all. As a matter of fact, you can go on this conversation with I can go on this conversation for 6 hours and not be done.
Yeah.
So,
We both get pretty fired up about it because we see it. It's right in front of us all the time. So, Simeon, let's talk about Bill 23. Let me just share this segment here. Let me see if I can bring it up. I think there it is there. So, talk to us about Bill 23, what you're seeing in terms of the opportunity there.
So Bill 23 was spearheaded by a good friend of mine and a good friend of Rain. He's blessed the stage of your events virtually a few times now. Tim Hudak, the CEO of the Ontario Real Estate Association, and Tim, for those who don't know, is a career politician and CEO. He ran the Conservative Party of Canada, the Ontario Conservatives, for a number of years.
Mhm.
And he is just one of the smartest and most community focused men I have ever met.
He's a
So
cool cat. Yep.
he's definitely one of my top people in my network, bar none. Not just because of position, but of who he is.
Mm-hmm.
So he spearheaded before Bill 23 what was a task force, an Ontario study and task force that resulted in Bill 23. And he was one of the key people on that. So Doug Ford, him, Minister Steve Clark, the entire crew sat down and did a mind share over 4 months, to come up with 20 points to go to the legislature with. Out of that, over the last 2 years now, resulted Bill 23 that's on your screen right now.
Yeah.
Bill 23 was voted by all parties, overwhelming support. There was some concerns around the green belt, and if you Google it right now, you'll still find some nonsense around it. But the government has made it very clear as to what is and what is not going to be included in it. But it's from the lens of real estate investors, from the lens of Canadian citizens. This has the capacity to quadruple the available inventory of homes in this province of Ontario.
Mm-hmm.
This changes archaic and inefficient zoning. So let's call GTA, let's call East York, York, North York, and Etobicoke. For those who don't know, it's what we call the 416 now. The 416 is comprised of 5 cities that became a mega city. This city, 80% of it was built in the last 65 years. About 65 years ago, the vets that were fighting in Germany came back. All those vets needed homes,
Mm-hmm.
and the government built veteran housing galore.
Yep.
All beautiful little rectangles, 45 feet by 110 feet, 90 feet by 40 feet, all over the city, littered it, all bungalows. Beautiful housing for all, a functioning city, no problems. But in the 1980s, in the 1970s is when my parents came to Canada. In the 1980s, other people came to Canada. 90s, 2000s, right now. Where are we going to live? We're all working. We opened restaurants. We opened construction companies. We're doing the Canadian dream, but we got to live somewhere. Homes that were worth $50,000 in the core of the city are now trading at $4 million because too many people that need to live there. And the zoning still dictates a single family dwelling that is surrounded by infrastructure and high rises. Here is a little bungalow. Well, there's time to wake up and smell the coffee. You don't have to make it a cement city in all high rise, but so for me to make this into a fourplex, let's say I lived in this home, my kids grew up, they're 18 and 22, it's just me and my wife. I just want to live in a condo or go back to Greece or whatever the case I want to do, live life. I want to turn this into a fourplex. This is like off in the last 20 years, all the things. Normal life, guys. Think normal life. Not investor, nobody special, regular brother or sister of ours on the street. For them to do that, they would have to fight for 2 years with the city. They would survey all the neighbors to say, can Simeon turn his beautiful bungalow into a fourplex? All of them would say no. We don't want our beautiful street to change. We're Torontonians and we deserve this. But when your daughter or son are looking for a place and you're paying $4,000 a month for a closet in the sky, all of a sudden you have something to say because there's nowhere to live.
Mm-hmm.
By making all these areas from single family zoning to as of right triplex, fourplex, or fiveplex, by adding a garden suite, not only do you stop the NIMBYism that has paralyzed this province for the last 3 decades, you allow opportunity for creating enough doors that rents will slowly either come down or stay put, which is now becoming a stable market. Don't worry, investors. There is so much rents for everyone. But what I'm getting at is you want to create a stable, livable city. Right now, investors are picking it apart like we're winning big, but it's not nice. This horrible environment is creating money for investors like me, like you, but it's not sustainable and nice. It doesn't feel good to collect $4,000 a month from a 600-foot condo. It's not normal.
Yeah.
Because you know how much they're making. By producing more housing and opportunity, you will have more doors across more properties in a stable, sustainable market. That is what this Bill 23, what's on your screen right now, is aimed at doing. The opportunity there is you need to be ready to act. And what I mean by that is we're not talking about months of preparation, but for the investor who is looking and understands what this will do, you need to be qualified. You need to have a good understanding of how a triplex is constructed. So, how do you take the wartime bungalow, 1,200 square feet, add a basement suite, convert the main, add a second floor, that's three now, plus a nice garden suite in the back, or two.
Mm-hmm.
If we go to 5 doors, we can add the complexity, of course, of CMHC financing.
So Simeon, share with me, when you look at what's going on, I think this bill, I know everybody who's in Ontario and is actually in the real estate game is really excited about this bill. It's going to take time, of course, to build that inventory up. So lots of opportunity there and time frame. What do from an REC Canada point of view, how are you approaching it as an organization? You're working with developers, you're working with builders. What exactly are you doing in terms of being able to embrace this bill, use it to your advantage to support your investor clients? Anything that you can give us insights into there?
Yes, I can. And I will tell you that Bill 23 has single-handedly changed the trajectory of my investment career personally. I am preparing and consulting with my legal team to potentially start a fund where in a strategy where I'm going to be able to approach everyday buyers and sellers, buyers to get into the fund and sellers to either put their property in and stay as a benefactor on the property, or we outright buy them and construct a line of product that's going to be branded. So a specific look of fourplexes, a specific look of triplexes that are going to be our signature. So I believe this bill, this opportunity is going to be my exit strategy in life. I'm going to I know as a fact that I will create millions of dollars in profits while creating clean, affordable, and stable housing for my fellow Canadians. So I will
I love it.
profit by doing the right thing.
I love it. And, so we're going to put your contact link and information in the description below, Simeon, and where people can reach out to you or your team and start to look at these opportunities as they evolve and stay in contact with you. I want to say something here that I think is so important is that, just the other day I was listening to somebody say, there's no other opportunities in Canada other than Alberta. And you and I are both big fans of Alberta, but that statement is simply not true. We both love Alberta. You were born and raised there, or not born and raised, but you spent a lot of time in Alberta as a young man growing up.
Born and part raised in Alberta.
Part raised. There you go. So the point is, we love Alberta. But here's the thing about it is that we see opportunities across the country. A lot of people are shut down around Ontario. It's too expensive. It's too expensive. And the reality of it is this. I often say, from the Real Estate Investment Network point of view, there are no bad real estate markets. There is just the wrong choice of strategies or tactics in any given market. And what has happened here is that, we were bumping up against these headwinds in Ontario, but guess what? This opened up a door of opportunity to approach and look at different strategies, look at different tactics. And I love the fact that given your experience, given the breadth and depth of your team and your experience, is that you really can be the leader for investors to take advantage of those opportunities and to grow into it. And so, this for me is a real cool insight into what's going on, and that there are people like yourself, specifically in this, we're talking about you and REC Canada and the Real Estate Investment Network. It's why we have you as trusted partners, is to create these opportunities for the investors so that it isn't as intimidating. They're not sitting on the sidelines doing nothing. There is actually literally opportunities that are starting to emerge if people are paying attention and putting themselves in the right environment. As we wind down, Simeon, anything you want to add to this conversation before we sign off?
Yeah, I think we did a great job in threatening our audience with a good time to come.
Yeah.
There is nothing that has evolved yet, meaning that nobody is behind here to catch up. There is, so what we, just like what you said about Alberta, people are like, oh, Alberta is great. Ask me 5 years ago if Alberta was great. It was the worst. Alberta is cyclical. Ontario has its own issues. Everything you said is true. There is the right strategy at the right time. And that's why we have each other. So these communities, RAIN, for example, has been around for 30 years, following more cycles than anyone. The whole point is, if it was all the same, there would be no point in watching this video or of me having to stop.
It's true. Yeah.
So the whole point of having community is to learn from each other and understand the perils and, of course, the advantages of any given market. Right now, Alberta is hot, but if you don't pay attention, you're going to get burnt. So be careful in everything that you do. Due diligence is absolute key. Action over paralysis is absolute key. Just make the right team and make the right move. As this evolves, as you were saying, let's close this down. As this evolves, stay connected to RAIN. Reach out to us directly, whatever means you need. But there is no doubt that we're going to be creating millions in the next few years.
Beautiful. Simeon, thanks so much as always for your valuable insights. And we're going to do this again real soon.
Love to all.